Welcome to Morningstar. I'm Holly Black. With me is equity analyst Tancrod Fulop. Hello, thanks for joining us.
Hello, Holly. Thanks for having me.
So one of the sectors you look at is utilities, so that's energy firms and the like. How are they being affected in the current sell-off?
They tumbled basically in line with the market despite being a bit less exposed than other sectors. This is because they were a bit overvalued before the market rout, and so in terms of impact, there is still an impact. So if you look at the value chain of the sector, you have an impact of the downstream part of the value chain, which is a retail supply of energy to households and business. And over the last weeks, the consumption of gas and electricity declined between 10 and 20% in Western European countries. So you have an impact on that part of the business, and also you will have an increase in bad debt provisions, etc., because customers are not able to pay anymore. And if you look at the upstream part of the business, power generation. The impact this year is limited because the power production is mostly hedged in advance at high power prices, but you could have an impact in the next years because since the beginning of the crisis, forward power prices have tumbled quite significantly. Then companies with exposure to E&P, like Centrica, there is a huge impact because of the collapse of oil and gas prices. LNG also is massively affected because of the drop of gas prices, and finally you have an impact for waste management companies like Veolia and Suez because you have a massive drop of industrial production, so you have much less waste from industrial companies.
So one good thing about these businesses is they're quite defensive because we still all need gas and electricity regardless of what's happening. So that makes them quite popular with income investors because historically they've paid quite reliable dividends. But what is the outlook for those dividends now if these companies are coming under pressure?
Yeah, as you mentioned, it's theoretically a defensive sector, but unfortunately, over the last days, there was a wave of dividend cuts, and this reflects more government pressure than balance sheet pressure. A good example of that is EDF and Engie, which cut their dividend yesterday. And it's because the French state is a shareholder of those companies, and the French state asks every companies in which it holds a stake not to pay any dividends this year. Then in Germany, the German government asked every listed companies not to pay any dividends to be eligible to receive financial support. So that puts dividends of E.ON and RWE at risk. Centrica also cut its dividends for this name, which is very weakly positioned. That reflects balance sheet pressure, and I expect 2021 dividend to be cut too. That's it. Veolia also halved their dividend. So yeah, finally, so the sector is supposed to be defensive. You had cuts, and I expect potentially more cuts.
Okay, so you mentioned quite a few companies there that the dividends have already been cut or are about to be. Are there any stocks in this sector that you still like?
Yeah, against the current uncertain backdrop, I will go for quality, which means business and geographic diversification and exposure to midstream, so regulated networks, and to renewables. I like Enel. Enel maintains its dividend plans for 2022, also reiterated its 2020 guidance, and has high exposure to renewables. It's one of the global leaders, and high exposure to regulated networks, for which the impact from COVID will be limited. Otherwise, there is also Ørsted, which is close to my fair value estimate. This is a global leader in offshore wind. And I will benefit from any pullback to get entry points in Ørsted.
Oh, that's a great point. This could be the time to get into renewable energy. Tonka, thank you so much for your time. For Morningstar, I'm Holly Black.